Thank you. That was a long intro, apologies for that. Here to talk to you about Jupiter Mines, and this presentation's on our website. There's a bit to it and I'll probably move through too quickly for all of the detail, but for anyone that's interested, this is on our website today. So Jupiter is a manganese mining focused company. We're listed on the ASX and our market capitalisation, as you can see there, is a little over $500 million today. We listed in 2018 and we listed 49.9% that we own of one of the world's best manganese mines. It's a mine called Tipi. It's in South Africa. It's a top 5 producing mine and has been since the last 5 years. It's been operating since 2012. It has more than 100 years of mine life remaining. So on the point that was made previously, it's very long life. There's a great resource there. It's a low cost mine as well. And for that combination of reasons, the mine has paid us, as the significant owner in that mine, a very significant dividend flow in the time of our investment in that mine. And that's resulted in us paying good dividends out to our shareholders, so much so that, as you can see there on the page, we've paid 77% of our current market cap in dividends in the last 5.5 years, with more than 100 years of mine life remaining. So the focus up until recently has been just that: produce good cash flows. There's no debt at either Jupiter or at the mine, pure exposure to the manganese price, low cost operation, and we've been very successful in paying good dividends out to our shareholders. There's an ambition to do more than that, and there's an opportunity to do more than that, as I'll explain in this presentation. And a big part of that is what we're talking about here today. Taking the fact that we've got a significant endowment of manganese, that we're already a major producer, and taking some of that manganese and upgrading it into battery grade manganese for future sale into that market. I'll talk you through our strategy in a minute, but just a little bit on Tipi. So this is now the mine in South Africa. As I explained a moment ago, it's a great mine. It's been operating since 2012. And I've got on the page here the last 5.5 years of financials and operating statistics since we, Jupiter, IPO'd our interest in that mine. And you can see there the sales of around 3.5 million tonnes of manganese ore per annum have placed this mine third or fourth largest manganese mine in the world. Manganese prices move around as they do, and they've been quite low recently, but notwithstanding low manganese prices at some periods during this mine's operation, due to the relatively low and stable costs, as you can see in the chart on the top left-hand corner there, we produce good earnings and cash flow. You can see that bottom right-hand corner. Mine does a great job on ESG as well, and we just published yesterday our inaugural sustainability report. Really a lot of that was about explaining the good work that's already done at the mine. It's a mine that comps against the best mines in the world, I think, from a safety and an ESG perspective. And so part of us bringing out our sustainability report at Jupiter is explaining that good work to date, and also highlighting some of the very obvious things that we should be doing to continue that good work at the mine. One of the most obvious things is putting solar in at the mine, so you'll see that in our report. Bottom left-hand corner are some manganese mines in the Kalahari manganese field. Ours is highlighted in orange. You can see there's some very significant remaining mine lives of these large mines, our own there in that photo. This is a photo from the south looking north. Our mine, Tipi, is the southernmost of the major mines in the Kalahari manganese field, but you can see there on the photo, and this is a photo that's 32 kilometres north to south. This is a very significant manganese field. You've got a lot of the world's most significant producing assets currently cheek by jowl with each other. Most of the significant remaining mine lives for producing assets all in that photo there, and our mine's one of the best of them. Jupiter now financials, again back to IPO, just making the simple point I made a moment ago that against the current share price, with 120 years of mine life remaining from the mine that has supported these dividends, the business has done a good job of paying dividends to date, and we're committed to continuing the same dividend policy that has been in place since IPO, and that is to pay out 70% of all dividends that Jupiter receives from Tipi or any other mine that we own to Jupiter's investors. And we've paid in excess of that 70% for each of those periods shown there. Our most recent dividend was paid just last month. As I mentioned earlier, we have a strategy to continue to pay good dividends. We've got the opportunity to do that. Chippy is up and running well, as we've just seen. But in addition to that, to grow our business, to not just pay out dividends for the next 100 years or so, although we have the setup to be able to do that, but to take the advantages available to us with respect to the context we're looking forward to and grow this business. The strategy, which is on our website, we released it in March of last year, is a very long form document. I've pulled out a couple of the important slides here with a particular focus on the fourth limb of that strategy, which is focused on taking supply from Chippy, converting it into electric vehicle battery grade manganese and entering that market in the coming years. The other elements of the strategy you can see there, there's an element around improving efficiency. In South Africa, a lot of that has to do with bulk logistics. Our mine's a long way from port, all of them are. We make good money, but we're in some parts hauling via truck, via road 1,000 kilometres to port. So a large focus of what we do going forward from an efficiency perspective is focused on improving logistics, since that's actually a much larger part of our cost than mining. Mining's typically 8 to 10% of our CIF cost of production. Land logistics, rail and road is 35%, and that's why that's a big part of our strategy, continuing to do better in that area. We have a strategy around growth actually within the Kalahari manganese field, looking at that photo a moment ago, getting more production within that field, given the long remaining mine lives of many of those mines, including our own. I mentioned a moment ago that we've just put out a sustainability report that gives a roadmap of what we're going to do going forward. And then finally, we have a strategy that I'm about to dive into around taking byproduct ore from Chippy and converting it into battery grade manganese. Justin will talk about this no doubt as well, so I don't want to steal too much of his thunder, but manganese is a critical mineral. Its use is in the cathode of electric vehicle batteries. Its value relative to alternatives is that it's cheaper and more available than nickel and cobalt. And for that reason, we can see, as you can see on the slide here, charts from Benchmark Minerals, manganese containing cathodes, manganese containing electric vehicle batteries grow in prominence over the latter part of this decade. And that is because of changing cathode chemistries towards greater manganese use. And that's really regardless of the chemistry family that the batteries are using. That we're seeing that across the board, and that's a fairly consensus view there. So there's a good market opportunity available. That's just the matching demand in battery grade manganese looking forward, driven by those key factors. China's absolutely dominant in this market today. Of the quite small amounts of HPMSM that's produced today, 98% of that's produced in China. China will continue to be a strong player here, but there's a real need for the production of HPMSM outside of China to support markets outside of China, and that's where we're focused. So although China is going to continue to be a strong player here, you can see on Benchmark's numbers in sort of the latter part of this decade, they start to become a smaller player. You can imagine, given China produces 98% of a small market today, all of that growth is going to be overweight to ex-China, and that's really where we're interested in focusing our efforts. Notwithstanding some growth in probable supply there from new conversion capacity coming on in the world, including ours and Element 25s, for example, there's still a nice market gap there, and that's a big part of obviously why we're interested in entering this market as an addition to our core business of continuing to mine manganese and pay the sorts of dividends that I showed you in a moment ago. So all of that growth in electric vehicle batteries and commensurate growth in battery grade manganese and a slow catch up in conversion capacity, the capacity that you need to install in the world to take manganese ore and make it into battery grade manganese results in what you can see on the page here, a deficit emerging in about the middle of this decade and continuing to grow. And that's, as I said a moment ago, the chart on the right, particularly pronounced in North America and Europe. There's a demand, obviously, for battery-grade manganese and all electric vehicle battery minerals in those particular markets. But today, there's almost no capacity in those markets. And that's why you see, relative to supply, demand far outstripping and growing in that regard. And that's obviously because there's only one supplier really in either of those two markets today. So all of that demand has to be resourced through new supply that needs to be constructed. So Jupiter's interested in this, and I've touched on this for a couple of reasons. We've got a good business today. I showed you the highlights of that a moment ago. And large parts of our strategy are actually about growing and consolidating in that same business. This is an add-on, if you like, but we think we're well positioned to enter this market for a couple of reasons that I'll explain. I've shown you a few slides on the market entry opportunity. If there wasn't an undersupply forecast, then we wouldn't be focused on this. I've just shown you now 3 charts saying that we think that there will be a pronounced undersupply. It won't exist forever because there is enough manganese ore in the world, and that's part of the attraction of manganese. You won't be short supply of the feedstock. What you are short supply of for about a 10-year period emerging in the middle of this decade is battery-grade manganese, and that's what that chart now from Bloomberg shows on that page, is that of all of the battery minerals shown there, manganese is most undersupplied. Yes, because of growth in demand, but moreover because of no supply capacity being available in the world. So that's what we're targeting. We also think that we're well positioned to be able to enter this market. We have a resource in Chippy which has more than 100 years of mine life remaining. We're going to use a byproduct feedstock from Chippy, so we will continue to produce the same volume of benchmark 37% grade manganese that we sell into the steel market, and that's what supported the financials and the dividends to date that I've shown you. We screen off in that process 30 to 32% manganese ore, and that's the material which is quite well suited to going into this particular business. And so we've got a strategy, in part because we've got a ready, available and suitable feedstock to be converted into battery grade manganese. I skipped on it earlier before, but we also have some large investors at Jupiter. AMCI, second largest investor in Jupiter, POSCO, third largest investor in Jupiter, who are very well positioned in this space. In the case of POSCO, they're a potential customer of a facility like this. POSCO is a big Korean steelmaker, but they're also growing a business and already in this space of taking materials like battery grade manganese and making cathode active material. AMCI is a large US fund some may have heard of, and they've been very active in downstream investments, in particular in North America, across the battery mineral spectrum. So in addition to having scale along mine life, a mine that's already producing and a suitable grade of byproduct material that we can use, we've also got some investors in Jupiter who are well positioned to assist us. And obviously we're doing this because we think the value upside is attractive. We've just released a couple of weeks ago a scoping study on our work to date. A big part of that was the pink stuff you can see on the page there, which is battery grade manganese, high purity manganese sulfate monohydrate. That is what we've taken Chippy, what we call low grade ore, 32% material, and put it through a flow sheet to produce that material. So we've satisfied ourselves that we can technically do this. North America does make most sense for the processing facility. As I mentioned, our mine is in South Africa, but for a raft of reasons, North America currently is clearly our favourite in terms of a location to put this conversion facility. So that's what we intend to do. And the economics look attractive, as you can see on the page there. Those are project level economics. Based on that set of scoping study outcomes, the Jupiter board has approved us now moving into a pre-feasibility stage, which will run for the remainder of this year, and you can see that on the page there. Ultimately, what we're looking to do is to be in the market in the supply of high purity manganese sulfate monohydrate to the market in the latter part of this decade. That's in part because we think that's a prudent and necessary amount of time to do this study work and to work up to ultimately what will be an investment around 2026 if it all looks good on the further phases of study, but it's also that is when the material is actually required by the world. So again, there's a detailed scoping study, or at least a summary of it, on our website for those who are interested. And then in summary, very quick read through, and hopefully you're interested enough to go and have a look at the pages again if I've covered it too quickly. But Jupiter is an existing major manganese miner already, and that is because we're invested in a really great mine in South Africa, and we've got a growth strategy to continue to pay dividends as they're available to us on the same policy. But then in addition to that, take the strengths and the worldview that I've just explained to grow our business, including in this area of supplying high purity manganese to the EV battery space in coming years. Thank you very much.